Hello everyone, welcome to my brand new channel. I'm going to be logging my trades. I'm going to be showing you my thought process as I do things, and unfortunately I cannot start from the beginning. You're probably going to need to have some basic knowledge about what a stock is, and then what are options. So we're going to do some pretty basic things. I mostly do cash covered puts, and I do some covered calls, um, and I like to do things weekly. So I'll just walk you through the rationale. Some of it may not make sense right away. That's okay. We're jumping in midstream here. This is a trade that could have closed out on me today, but it didn't. So I'll narrate what's going on. But what are the basics? You're seeing a lot of numbers on the screen here, and essentially we started in this position on the 13th of October. We're about 3 weeks from then, and a few trades have happened. So I was eventually put the position. So when I started, the price was $122 per share of Apple. Then it progressively went down. I got put the shares, and then I sold some calls, and I've been reducing my break even along the way to what it is currently, 115.42 cents. And my latest call was done midweek. This is not something I typically recommend doing. I recommend just making trades once a week, if possible, to reduce the temptation of making an incredible mistake, which there's a lot of opportunity to do so. Basically, in the middle of the week, the stocks started to rise and it went above or it was right at my strike price, where it was previously much lower than that. And it was at 108 when I sold the call, and it went up to somewhere around 115. I don't know the exact number, but around 115. And I felt that I did not want it to be called away at 115, even though my break even was 114. So I closed it out, and I ultimately lost, I think, $15 on that trade, which I felt like was a small penalty to get out of something where I had essentially gotten it wrong. And so I went right back in and I sold another call at 119. This then made my break even come back to basically where it was at the beginning of the week. I essentially lost a week's worth of time, but in the meantime, the stock has recovered close to my break even point. And so it was trading at 115, just so you can see right here, trading at 115, and my break even was 115.42. And so today, the market continued to go up over the last couple of days, actually, not just today. But I'll show you where it was an hour before the market closed. So my call at 119 was now worth 7 cents. I originally sold it for 18 cents, I believe. And not a whole lot, but it was basically to break even from the loss that I created by being wrong when the stock went up. And so that was just to cover my tiny little loss. And I thought, okay, going from 115 to 119 in 3 days, I'm good with that. And so an hour before the close, it was at 118.29. And there were a couple of scary moments as I was checking about 15 minutes before the market closed. It did go above 119. And I briefly considered buying to close out the position so that it would not be called away from me. Why didn't I want it called away from me? Well, there's this thing happening right now. It's called the American election, and it's very volatile. It's causing the market to be very volatile, and there could be some good news that comes around, and I don't want to be called away and not participate in the good news that occurs over the weekend. If it's bad, it's fine. I'm already above my break even. I have a little bit of a buffer, and I'll just sell a call on Monday morning and figure out what's going on. But basically, about an hour before the close, my position was looking okay, but there were a couple of scary moments. And normally, what I would have done if there was no election happening is that I would have probably closed out the position to then sell the call for the next week. So next Friday. So on this one expires here today, November 6th. This one is next Friday, November 13th. So my break even, as you recall, is 15.42, and right now it's trading. Well, it actually closed at what do we say? What do we say? What do we say? It closed at 18.69. Okay. This is live right now. The other two I was showing you were basically during the market while it was open, and you can see after the market close, everything that is above this actual market price, all these strike prices, they're worthless. Nobody wants to buy it at 120 if it's only worth 118. That would be silly. And nobody wants to sell it at 117 if you can sell it for 118. So this is why everything is worth a penny here, and these are still in the money. They are worth something. So calls and puts, make sure you know what all of that means. But this is the live pricing, and if we look at next week, again, this is looking on the right side here. This is for next Friday, and we need to just consider what can we do here. Normally, I would have probably sold the call a little bit out of the money, maybe around 121, because it's trading at 118. Okay, I figure, okay, if it goes up a couple bucks, that's fine, and I can capture that gain. I'm good with that because if it goes up from 118 to 121, I've got $3 out of 118. So it's going up 2.5% in 1 week. Well, why is that significant? It's significant because if you multiply that out by 52 weeks, that actually means that annualized, it's going up by 130% in a year. Well, I don't know that Apple is going to do that every week. So I'm okay giving up the growth beyond 121 if I can capture this $1.03 as the premium. So what do I get for my troubles for selling this call? I get $1.03. And so 103 divided by 118 multiplied by 52, that's 45%. Why don't we try this? Let's just do a calculator. You can see the numbers. Okay, so I'm calculating what my return would be annualized if I sold this call. I didn't do this today. I'm just showing you as a hypothetical. 1.03 divided by, what is this? The strike price is 121 equals some tiny amount. If you do it every single week, 52 weeks, you get 44%. 44% for the stock going up an average of an annualized 130%. Which one's likely to happen? Well, it's not likely to double, is it? I don't know, maybe. That's optimistic though. Can Apple double from this point? I don't know. Maybe if they make a killer phone, but I don't see that people are clamoring for the most recent one. And will they release another one in the next year? Maybe. I don't know. But I'm not counting on that. And if it doesn't, if it just kind of stays level, that's okay. I keep my 103, and then I do it again the next week, and I keep on doing it. And if it stays exactly where it is, I make 44% in 1 year. Not too bad. I didn't do that. Again, I didn't do that because the world's crazy, and I don't know what's going to happen over the weekend. And if good news comes in, I don't want to lock myself in at just a couple percentage points because, well, this is an extraordinary event. It only comes every 4 years, and things are very emotional and heated right now. And so, good things can happen, bad things can happen. I'm just going to let the cards come as they are and start to make sense of it afterwards. I'm not going to try and bet in front of the curve because I'd be flying blind and I think I'd be making some bad decisions. So, anyway, long story short, what happened today was I let my option expire. I kept my $18 that I originally sold it for, and I still have the stock. I still have the Apple stock. My cost basis is now maybe a couple cents less than this, but let's just call it 115 something. And it is currently trading at 118. So I'm feeling okay because I started with the position at 122. That's what it was trading for. And if I had just bought the position and done nothing, I would still be in the negative by $3. But as it is right now, I'm in the positive by $3 through some of the option trading that I've done. All right, hope that makes sense. That is the trade for the week. Goodbye.